Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Bloomberg reported over the summer that businesses and households served by the largest U.S. power grid will spend a record $16.1 billion to ensure electricity supplies amid a massive artificial intelligence-driven demand surge. We are talking about this a lot. And having said that, we just talked about what NVIDIA is doing with OpenAI and their spend. That price increase, though, prompted calls from utilities and energy groups to build more generation. So we want to see what our next guest has to say about it. He is in the midst of it. Toby Rice is president and CEO of EQT, the nearly $31 billion market cap vertically integrated energy company, obviously specializing in nat gas. Toby, good to have you here. I want to start big and broad, the macro. How would you describe it right now for you in your business?
Natural gas markets, in one word, I would say it's going to be very volatile in the short term. And one word for the long term, I'd say incredibly exciting. When you look at the three major themes that are hitting energy right now, the desire to continue to evolve our energy systems, replacing coal with natural gas, major theme. AI is what everybody's talking about right now. That's going to be a major source of demand. And then providing energy security to our allies is still a thing, and that's going to be playing on the LNG. You step back and you add it all up, we're talking about a 20 to 40% increase in natural gas demand in this country.
Well, let me just ask you, because before that, let's go back. That's longer term. But I know our BI people have put some research, and they talked about North American gas is at an inflection. And they talked about AI data centers adding to domestic demand near Appalachian supply, while LNG exports sustain global pull. But so tell us about the shorter term. Is there a little bit of an inflection point for you?
Well, I'd say the next 3 to 5 years, data centers and fueling the AI revolution is going to be a very big focus. But keep in mind, we're going to be doubling U.S. LNG exports over the next 5 years. So we're doing both of these at once. And the good news is that we've got the natural resource in this country. It's just going to come down to how fast we can actually get this infrastructure built, focusing specifically on the power demand side of things. When you step back and look at electrify everything, not just AI, we're looking at a 10 to 18 BCF a day natural gas demand to meet that. That's a 10 to 18% increase in demand, and about 40% of that is going to be for data centers. So this is going to be really big. We're seeing these opportunities happen in our backyard. EQT, we signed up over 1.5 BCF a day of natural gas.
Billion cubic feet.
Billion cubic feet,
gas,
yeah.
Just for those who might not.
And this is a market that's about 100 BCF a day, just to make the numbers ballpark. So 1.5 BCF a day of natural gas supply for these data centers in Pennsylvania. This is going to generate enough power to almost power 2 New York cities. So these are major league infrastructure projects in a grid that desperately needs more power generation.
The tech companies like to talk about nuclear power generation powering their data centers. The president likes to talk about the promise of nuclear power. And I say promise of it because we know how to do it, but it just takes a long time and it's very expensive. How do you view the increased interest in recent years in nuclear power as a threat to your business?
I think that natural gas is the clear winner right now. You know, this has been a big question that people have been asking over the last, call it 18 months. What is going to power this AI revolution? What was originally thought to be renewable is going to pick this up. Then people went to nuclear and realized it's going to take too long to get it done. Comes back to natural gas. Why? Because we have the track record of scale and speed. If you look over the last 10 years, we've seen natural gas power demand increase 14 BCF a day. So think about how much we're planning on doing. We've done that with natural gas. Now, longer term, we think nuclear is going to be a great option. But understand this, natural gas has a vehicle to become zero carbon. And that's why we're spending a little bit of money today on carbon capture that will enable natural gas to be the first reliable, affordable, zero carbon energy solution. The world does not have that today.
You know, just like there's a big spend in AI and data centers, there seems to be a big spend in that energy to support it and what's needed. You have announced multiple long-term sales and purchase agreements, I think just in the last few months. Some are fearing an oversupply, Toby, in 2027, 2029. What are you hearing from LNG buyers about kind of your demand visibility window, and how confident are you? It sounds like you're pretty confident on the longer term pull for LNG, or U.S. LNG specifically.
Yeah, on the LNG front, we certainly wouldn't disagree. We do see a little bit of an oversupply situation globally for LNG that could lead to softer prices in that 27 to 29 timeframe that you mentioned. And you say, well, Tobe, why did you just go and sign up for a massive amount of LNG? It's because our contracts are going to be starting. We're going to be getting that exposure in 2030. So this oversupply will pass, and then we're back to a tight situation And that's where LNG is hitting the market. When you want to talk about demand, just step back and look at this world. For a world that's going to continue to care about climate and emissions, replacing the coal in this world is going to require an additional 170 BCF a day of natural gas. If you care about the people living on this planet, it's going to take an additional 120 BCF a day.
How sure are you that people care about that? We are certainly feeling this year a pushback.
Well,
when it comes to concerns about carbon emissions and climate.
Yeah,
not from everyone, and I have to be very careful because there are a lot of folks that are working really hard on this area.
Yeah,
but how confident and comfortable are you
on the energy transition? There's a ton of people that are passionate about this, and that passion's not going to go away with just one election. But I think what is happening now is people are stepping back and they're looking at the plans they put in place, and they're looking at the results of those plans. And what we're seeing is that Americans' energy bills are up over 35%. Now, renewables is not to blame for all of that. We've had a massive infrastructure cancellation movement that's prevented us from getting energy infrastructure built. That's the root cause of this issue. But when you step back and look at how big of an impact this has had, we spent over $2 trillion on renewables last year. And to put that in perspective, we spent over $1.3 billion in oil and gas. The energy solution that provides
say that again?
$2 trillion in renewables.
What do you mean we spent?
The world.
Okay.
Invested over $2 trillion in renewables.
And build out and...
Yeah, and then for comparison, oil and gas investments that provides over 80% of the world's energy, we invested over $1.3 trillion. So this has been a very big theme, but it's coming.
So this shows to you that this is the future is renewables. That's where they're spending money. Is that what you're saying?
If you went by where people were spending money, that does not necessarily mean what's going to be the future. The future of energy is going to be the energy solution that is affordable, reliable, and clean, and has all three of those attributes in check. I think the energy transition maybe has prioritized the clean aspects of energy, but as we're seeing right now, Americans are scratching their heads looking to see the record amounts of energy investments that we're making, and the record amounts of energy production in this country, and their energy bills are up 35%. They're scratching their heads. Why is this happening? It's because the solutions that we're putting on the field need to be the right solutions, and that is natural gas.
But it's also because, as you said, the demand has gone up. For years, it was kind of flat, it was stable, and then we saw this huge increase in demand for power here in the U.S. So demand has a lot to do with it too. Well,
demand hasn't really started to pick up just yet. We're coming out of it. I think we're looking at massive growth prospects. But this really is a repercussion from all of the not underinvestment in reliable infrastructure over the past decade. Now, this country in America, since 2018, it's become almost impossible to get a pipeline built in this country. We own an asset called Mountain Valley Pipeline. It took an act of Congress to get that pipeline built. So infrastructure has been incredibly challenged, and that has really strained markets and really put some stress on the system.
So let's talk about those challenges. Are you having constructive conversations, or are you having any conversations with the Trump administration, representatives from the Trump administration, to try to ease those regulatory delays?
So this administration truly understands how important affordable and reliable is in the energy equation. Secretary Wright, fabulous. He really understands energy, all forms of energy. So I think we're going to have some practical approach towards energy solutions that we put in place. But that being said, the executive branch is not going to dictate the types of energy that we put in this country. We're going to need Congress to act to pass meaningful permit reform so we can get back to letting the most cost-effective, reliable, cleanest form of energy.
Do you consider wind power a form of energy?
Absolutely.
It doesn't seem like this administration supports that.
Yeah, I mean,
is that a mistake?
Well, I would say it's as a sponsor of a pipeline, Mountain Valley Pipeline that has been subjected to tremendous political force. This is a situation where I think we would be in a much better place if we would let market forces dictate the energy that makes its way to the playing field, let political force take the backseat. Unfortunately, we are going to need some help from our leaders in Washington, D.C. I hope they notice that we've got a massive demand surge coming. We do not have the right infrastructure set up right now. We need to do a massive build out. And just for people to understand the race that we're in right now, this is a national security threat for us. We have got to win the race for AI. And right now, how we're faring in the U.S., where we put in 6 gigawatts of reliable power generation this last year, China put over 60 of gigawatts of reliable power gen, most of that coal. So we are not keeping pace. We need to do a lot more.
Just want to go back to cost. Just because it's cheap And I understand there's other parameters that you're putting in there. I mean, there are nat gas, there are, leaks and so on and so forth that do impact the environment. So it's not the cleanest and purest. There are problems with it. And I just wonder if we're always constantly chasing the cheapest thing out there, that's not necessarily a good thing. And just bring up all the manufacturing that we've put outside the United States just because it was a cheaper good, that we're finding maybe that wasn't such a good strategy. So I just want to bring that back to the energy sector, that maybe sometimes things have to be expensive to get to a really, really smart solution.
I think we need to take a holistic approach when we're looking at energy, and we need to look at the balance between cost, reliability, and the carbon footprint associated with that energy. That's why when we look at those attributes for natural gas, that's why we believe that this is the energy solution of the future. When you look at regions that ignore and just over prioritize the clean aspects of energy, you have situations like Europe, and we've seen what's happened there. It's been a crisis. Thank goodness for America and the energy that we've been able to provide them to get them through this with our LNG. So it's got to be a balanced approach. It's not all going to be about cost. It's not all going to be about reliability or carbon footprint. It's got to be a healthy balance of three. Right now, we need to get back to the affordable, reliable.
Speaking of balance, and I just want to go to your balance sheet, because there is a spend, right? Everybody's doing it because they are chasing this AI spend and trying to be there in terms of support. You guys have talked about working down to a 2026 year-end debt target of $5 billion. I think that was after the Equitrans deal. Tell us about what you're considering to help prop up your balance sheet. And just got about 30 seconds.
3 seconds?
30
seconds. I'll tell you what our priorities are right now. Ensure the reliable production of energy. Right now, we produce a little bit over a million barrels a day of energy.
So anything that you need to do to meet that, you're not worried about the spend
for maintenance,
or the debt?
For maintenance volumes levels, we're going to be reliably providing the future by signing up these growth contracts, both on LNG and the data set build out. And from a cleanliness perspective, we've already made the investments, and we've already slashed our methane emissions. We've got one of the best environmental programs going.
So it sounds like the spend and the debt's okay for now.
Yes.
Okay, gonna leave it there. Toby Rice, President and CEO of EQT.